China stocks are just getting whacked. Is China going after companies that have too much power?
I think these are very serious violations that make us realize that capitalism is not alive in China. This is a dictatorship, and we're beginning to wonder. I question every one of those companies that's on that list. Any one of them could be vulnerable. It's time. You got to go. You can't own these stocks.
All right. So the Chinese government has been cracking down on just about everything investment related in 2021, from outright banning Bitcoin mining to completely shutting down cryptocurrency trading activities and putting massive restrictions in place on Chinese tech stocks and Chinese educational stocks. And to add on to all of this fear going on in the market, Cathie Wood and ARK Invest have sold off basically all of their positions in Chinese technology companies. So many investors are concerned. They're wondering, you know what, should we just get out of everything involved with the Chinese government, involved with a Chinese-based company, or are there some companies that are worth still investing in? So in today's video, what we're going to talk about is Nio, because Nio, while there is all of this fear going on with regards to Chinese regulators, Nio has had a number of great announcements come out, from record-breaking Q2 of 2021 deliveries to successfully expanding overseas and a number of other announcements as well. So in today's video, we're going to go over everything going on with Nio and Chinese tech stocks. Is it worth taking the risk with a company like Nio? Is the Chinese government going to turn against Nio, and everything else you need to know? So if you enjoy this sort of content, well then please be sure to like the video down below. Make sure to subscribe if you're new, and let's see if we can get this video up to 1,500 likes. We've been killing it recently, and if you want to see what stocks I am buying and selling in real time, well then make sure to join our Patreon group. You guys can see access to my $700,000 portfolio on Robinhood, my $200,000 portfolio on Webull, and you also get access to 2 of my 7-figure portfolios on both Charles Schwab and on JP Morgan and Chase. So if you like to see exactly what I'm buying and selling in real time, you want access to live streams, well then make sure to join our Patreon group using the link down below. But anyways, let's start off with Cathie Wood and ARK Invest. While they don't own Nio specifically, let's take a look at what Cathie Wood is saying about Chinese tech stocks in general and what their game plan is moving forward. And then we're going to get into a little bit more with Nio. But right now, Cathie Wood and ARK Invest says that they are rapidly shedding all of their Chinese stocks amid regulatory crackdowns in China. And this is important because even though they don't own Nio, they are saying that they sold the last of their remaining shares of Tencent. They're quickly selling shares of KE Holdings, JD.com, and all of their other Chinese stocks that they owned. Back in early 2021, in January and February of 2021, Chinese stocks made up about 10% of their portfolio, just under 10%, right around that 9.5% range. Now, they have less than 1% of their funds in Chinese stocks, and this is important. We can look right here. Their big sells over the last couple of days have been JD.com. They've been dumping shares of JD.com in all of their ETFs. In addition to this, we can see Tencent. Tencent used to make up a major portion of their position, and now they don't own any of it in their flagship fund. We can see right here, they have sold off the remaining shares in ARKK. They own currently 0 shares of Tencent. And it's the same across all their other ETFs as well. And in addition to this, we're seeing stocks that they used to own, they used to be very bullish on, like Baidu, like a couple of other companies as well. They are selling off their entire positions in all of these Chinese tech stocks, moving over to another sector in like more US tech companies. So what Cathie Wood is specifically saying is she's saying, look, from a valuation point of view, this is a quote from a recent interview. She said, these stocks have come down, and again, from a valuation point of view, probably will remain down. She says that there's too much risk associated with these Chinese tech stocks right now, even if they are good companies with good fundamentals, they have strong outlooks moving forward. That risk of the Chinese government is just too big for them to be invested in. So when we look at all these Chinese tech stocks right now, or any Chinese stock in general, we always have the big risk of regulators in China cracking down on the companies. We saw recently with Didi, they just prohibited it from being listed on the App Store in China, basically cut off their business from getting any new customers, and that could happen with any company in China. We saw with Alibaba back in 2020. They had major issues with the Chinese government, Alibaba and the Chinese government, because of something that Jack Ma had said. So we see time and time again that if the Chinese government doesn't like what is going on with the company, they don't want outside investors getting involved. Well, that is always going to be a big risk with any Chinese company, and same with Nio. So that's what ARK Invest and Cathie Wood are saying. But let's take a look specifically what is going on with Nio. So recently, Nio has had a lot of positive news come out. They had record-breaking Q2 2021 deliveries. They had successfully gotten a number of certificates they needed to expand overseas into Europe, like a couple of approvals, a couple documents in order to use their battery swapping stations, in order to have their battery charging stations, and in order to actually get their vehicles there. And we can see that recently, in the end of July 2021, their first batch of Nio ES8s reached Norway. So if we're looking at Nio in terms of fundamentals, yes, it's great. They had record-breaking quarter 2 2021 in terms of deliveries. They delivered 8,083 vehicles in June of 2021, which was over 100% year-over-year increase. They delivered 21,896 vehicles in the 3 months in the second quarter of 2021. So yes, deliveries are great. Expansion plans going well. They've picked Germany to expand into as the next country after Norway. Things are looking great in terms of fundamentals for Nio. But the big thing is we do not know what is ever going to happen with the Chinese government. Are they going to come out and say that they want to crack down on Chinese electric vehicle companies being listed elsewhere in the world? Like, because Nio is listed on the US stock exchange, and same with Xpeng and Li Auto. They're all listed on US based, like US stock exchanges. So we'll have to wait and see what happens there, but that is always a big risk. But let's take a look at this from what China's goals have been, because in my opinion, I don't see as big of a risk investing in a company like Nio as there is right now with investing in, let's say, obviously Didi or Alibaba or JD.com. All of those companies are more established, have been around longer, but Nio is very different than the other Chinese technology companies. So when we look at Nio and we look at China's goals, China has stated multiple times that they want new energy vehicle sales to make up 25%, 1/4 of all vehicle sales in the country in 2025. And they've been pushing heavily for this for the last couple of years. They've been subsidizing Chinese electric vehicle companies like Nio. Nio was struggling a couple of years back. They gave them money, they helped invested in them. And right now, like Nio's manufacturing is done at a state-owned manufacturing plant. So Nio definitely has the support of the Chinese government, and I don't think that's going to change anytime soon. No, the Chinese government has wanted Nio. They've wanted, at least some sort of electric vehicle company that is Chinese based to be a dominant force in the world, like that can compete with Tesla. So I don't see China changing their opinion, changing their current stance on Nio. Right now, they are very pro Nio. They are trying to do everything they can to help Nio expand and grow and produce more vehicles. So I don't think that's going to change anytime soon, especially with China's goal of having 25% of all car sales be electric vehicles within the next couple of years. So I don't think that's going to change. In terms of China with Nio, I don't think there's anything to worry about there. But in terms of US and China relations, and China potentially having issues with Nio being listed on US stock exchanges, that is always going to be a risk. Even though I don't think anything wrong is going to happen with the company, like what happened with Didi when they just took Didi off the App Store, I don't think anything like that is going to happen with Nio, because the Chinese government, at least for the next 4 or 5 years, is going to be pushing as hard as they can and putting as much money as they can into actually helping Nio. But in terms of like Nio being listed on the US stock exchange and Nio having outside investors that aren't from China, that is always an issue. So when investing in a company like Nio, you have to ask yourself, is that a risk you're willing to take? Are you willing to, invest in a Chinese company knowing that there's the risk that the Chinese government can step in at any point in time and basically they could shut down operations if they want. They could make it a state-owned company if they wanted. Like, you have to be prepared for anything if you're invested in any Chinese stock, especially right now. So what many people are saying is that, look, approaching this, all the recent news coming out of China, the regulatory crackdowns, what a lot of people on Wall Street are saying, like a big time Tesla bull. Dan Ives from Wedbush. He had said that what he's doing in particular is that he's going to look towards US-based tech stocks, companies in the NASDAQ, let's say, even like NASDAQ in general. He's going to be looking towards like big US tech stocks instead of having exposure to China, just because there's too much risk there right now. So you got to see a lot of top analysts are saying, stay away from Chinese stocks right now, Chinese-based companies. There's too much risk associated with it. And we've seen that so you just have to ask yourself, are you willing to take that risk? One company that I always like to talk about when it comes to Chinese regulations, Chinese stocks, is Alibaba. Alibaba is a stock that I have been invested in for a long time, couple years, and it has done well if you look at it over the last couple years. But ever since 2020, mid 2020, like June of 2020, July of 2020, we had seen that Alibaba got in a lot of trouble with the Chinese government when Jack Ma came out and made some statements that they didn't like. Ever since then, the stock has not recovered. They had reached an all-time high of $330 per share, and since then, they've been cut almost in half, despite nothing bad coming out with the company, like nothing wrong in terms of the fundamentals. They've only been growing in terms of, their revenue, in terms of how many customers they have. They've only been growing, yet despite them growing, the stock price has been cut in half, and that's because of Chinese regulations. So Alibaba is a clear example of the Chinese government getting involved. Me personally, I don't think the Chinese government's going to get involved with Nio in any negative way. I think they're only going to help them. The only risk we're gonna have with Nio right now is what is going on with U.S. and China relations, and with Nio being listed on the U.S. stock exchanges, because in terms of numbers, they're not gonna, shut down production of Nio. They're not gonna make it more difficult for Nio to produce cars. The Chinese government wants Nio to succeed. So you just have to ask yourself, are you willing to take that risk that at any point in time, China's government could step in? Or is that something you don't want to be involved with? Because then you could always pick companies, let's say like Tesla, or if you want to be a little more, you want to take on a little more risk, you could invest in, let's say, Lucid Motors or a number of other EV companies. Me personally, I am invested in Nio. I have added on these dips. I understand that there's these risks associated with Chinese companies, but for me, it's not like my whole portfolio. The only couple Chinese companies I invest in right now are Nio. I have some money in XPeng. I have some money in Alibaba and JD.com. So those four are the ones I have money in right now. You guys can check that out on our public.com, mypublic.com portfolio. It's completely free to follow me there, or you could also see it on Patreon group as well. So let me know what you guys think, but I want to lay out all the risks of Chinese companies, what ARK Invest is doing, and on the other hand, some positive news that has been going on with Nio. But I hope you guys enjoyed today's video. If you did, please be sure to like, subscribe, and I'll see you guys in the next episode. See you guys.